Hey guys, what is going on? Welcome back to the portfolio. Again, I want to thank everyone out there for supporting the channel. If you guys have any great video ideas, any video that you want seen posted on the channel, please let me know in the comment threads down below and I'll try to do my best to get a video out for you guys as quickly as I can. For today's video, in response to a number of viewers on the channel, I thought I'd take a look at one of the stocks I initially bought with the Robinhood portfolio back in 2016, one of the first stocks in the portfolio. That stock you see up on screen here is Prospect Capital, PSEC. If we go to the bottom of the graph here, you can see Prospect Capital is a corporation, a business development company that engages in lending to and investing in private businesses. This is a type of corporation that is highly regulated by the U.S. government. These types of entities were first established back in 1940 with the Investment Company Act of 1940. Essentially, there are a number of different provisions in which a company must meet in order to be considered a business development company. There are provisions with regards to how much debt a particular company can incur, the types of transactions in which it can engage. It requires a code of ethics, compensation, compliance program, a number of different things in order to get essentially better tax rates over the longer term. You can see in the middle there, it's essentially involved in generating current income, basically dividend income to its investors, and long-term capital appreciation through debt and equity investments. Basically, it invests in small, medium-sized companies and then tries to grow those companies over time, again, focusing on dividend income as one of its main objectives. Take a look with regards to its earnings. You can see earnings here, not too bad. Current earnings will be posted here just in a couple days, November 6th. Just put a video out on trading around earnings reports. Very risky, but can definitely make a lot of money in the shorter term period with regards to day and swing trading. But for the most part, it has been beating its expected earnings per share over the last few quarters or so. If we take a look in the middle here, statistics, you can see this is a somewhat large company, but definitely not the size of a blue chip stock in the hundreds of billions. This is 2.44 billion here. Current PE ratio 10.308. But the main factor with these companies is the dividend yield. You can see in the middle here, 11.426%, which seems very, very good. But we'll kind of talk about why that might not necessarily be the case. You can see here, with regards to the stock price, definitely has had a lot of volatility in the stock price here. Over the last 1 month, it's down 6.1%. As we go over larger periods of time, you can definitely see the volatility in the stock here. 5 years, you can see the drastic swings here. At one point, getting down under $5, then bouncing back up. I think at one point it was up over $8 here. Back down again and back up. As you can imagine, with regards to lending out equity, these companies can definitely trend up or down depending on the interest rate. And I think that's what's really causing this drop down here after spiking up here, up over $7.30. It's been falling quite rapidly here over the last 1 month. Again, down 6.1%. Over the last 3 months here, 1.12% with a very, again, drastic up and down course over that time frame. With these companies, again, the dividend yield looks very good, 11.426%. But if we take a look at some of the numbers on screen here, you can see the earnings per share, the dividend income paid out per year to an investor, as well as the payout ratio percentage. So essentially, if the payout ratio percentage is over 100, basically it means it's giving back to the company more than the company is actually making. That's not sustainable over the longer term. And you can see here from 2009 all the way to 2018 here, the majority of the years, the payout ratio has been over 100%. So essentially, you're returning equity to an investor. That comes out of the stock price. So you would imagine that this company over time would be decreasing its stock price. There's only a couple years there, as you can see, 2012, 73.3%. And current to-date number, 92.4%. Otherwise, everything has been quite unreasonable with regards to long-term longevity, sustainability of the dividend. A couple years there, 2010, 414%, 2016, 344%. So definitely take a look at some of these numbers when you are jumping into these types of companies. Again, the stock price is very low here, 6.7%, so very accessible to new investors in the stock market. Looks like it's got a great dividend yield here, 11.426%. I think the next dividend payment, because the price of the stock has been trending down, will be closer to 16%. So it appears to be a very good dividend yield, but if you take a look at the numbers here, again up on screen here, a lot of that is return of equity. Essentially, you're getting back from the company part of the share price rather than part of income that is generating. So definitely take a look at that. Just wanted to highlight that on the portfolio here. So far, I've been able to get a little bit of a longer term capital gain here, 9.62%, very good dividend income. The other highlight behind this stock is that it does pay out monthly. As you can see here, I've been getting monthly dividend payments of $18.36 in the portfolio. Those are non-qualified, unfortunately, so you have to take that into consideration as well. You can see here 6 cents per share, 306 shares, $18.36. So you are going to be paying more in tax with that dividend yield as well. So you have to take off a certain percentage for that. So just wanted to highlight Prospect Capital, again, a business development company that I've had for quite some time in the portfolio. So far, I've enjoyed the stock here, long-term capital gain of 9.62%, regular dividend income, but these are very, very risky. I definitely would not be putting more than a few percentage of your portfolio in these stocks. So just wanted to talk about that because of a few viewers on the channel wondering if Prospect Capital was a good stock to jump into. So shorter term, I think it's okay, but longer term, you really have to make sure that you're watching the interest rate as well as some other macroeconomic measures, because these companies are essentially towing the line of a sustainable dividend. Payout ratio is typically over 100% for a majority of these companies. So let me know what you guys think about Prospect Capital, if there's a better one out there. MAIN is another very good business development company. Main Street Capital, another company I've been taking a look at for dividend capture in the past. There are a number of these companies, but they are typically higher risk with much higher dividend yields than blue chip stocks that can be held for the longer term rather safely. So again, let me know what you guys think about Prospect Capital. Kind of that out in the video. Again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. Until the next video, we'll see you then.